All right, traders, welcome to the end of day recap for Friday, December 14th. I tend to do end of day recaps on Friday when, when there's decent market volatility or, there's just something to talk about because I don't do a market recap every Friday. I think it just makes sense to kind of go over just quick 10 minutes, on what the market did this week. It was surprising because today was pretty nasty overall, right? We started the day down and we went lower. Here's what the price action is for today. I've been doing this every day this week because it's been one of these really weird weeks where sometimes the market has gapped up a couple days and then has just given it back, which, makes for a difficult trading environment if you didn't kind of come into the day long and you can't unwind right on the open. But this is what we did for today. You could see just energy and gas names really and material names really getting hit pretty hard. Healthcare also got hit pretty hard. Keep in mind J&J is the largest weight in the XLV ETF. It's right around 12% of the ETF, so that led that group down today, down 2.4%. But man, energy is really getting hit hard, and it has ripple effects, right? When energy gets hit this hard, people tend to look at whether these companies are going to remain in business. There a lot of them have a lot of debt on their balance sheet, high yield bonds, right? So that comes into the picture about credit spreads. People don't want to own things like high yield bond ETFs because they're afraid, what's going to happen in there. So that's really getting hit hard. And even, look at the XOP ETF. And it wasn't like energy was that or oil was that volatile today. It was down basically where it started yesterday, and it hasn't taken that leg lower, but it's certainly giving some warning signals. I mean, look at this thing in XOP. It's pretty oversold. We'll wait for Thinkorswim to kind of bring this up. I mean, it's getting pretty oversold, but look at this thing go down. I mean, I was looking at a name that saw some call buying today, which was ECA. So first of all, this XOP ETF from basically just where it was in the beginning, I mean, we're talking about 2 months ago, has gone from 43 bucks down to 29. What's that percentage gain? I can't, percentage loss. I can't do that in my head, but sorry, there's some people that are having was that a little bit of a holiday party behind my office, but that's a 48% drawdown in 2 months for XOP, and that's pretty crazy. There is some support down here. I'm just not really looking to. I haven't really been in energy, so I don't know if I would be really looking to play the bounce, but maybe it bounces on this 29 level. But just as we talked about in last night's video, I don't want to spend too much time talking about all the things that are moving down, such as the banks, which could not hold another bid today. KRE is also sliding. The one thing that I'll add that I said yesterday was I talked about the intense selling that I think is being driven by people just liquidating. There was, I think after this came out after the video yesterday, there was $46 billion of outflows in mutual funds. So, people are doing they're doing their share of selling. And also, I talked about yesterday, hedge funds, right? So, names like Highfields, Eaton Park, Leon Cooperman has made that was announced months ago that he was making his office into a family office rather than a hedge fund. But keep in mind, the banks, just going back to the banks for a second, where do they make a lot of their money? Investment banks. They make a lot of their money off of, prime brokerage and hedge fund business. So if a decent amount of hedge funds are shuttering their business, they're not. That's another revenue. It's just another thing that is that is not good for the banks right now. So that said, they are starting to get really oversold. By the way, look at that false move on the 50-day moving average and lower. So that's going on. The transports. Also, looks like we just took out a virgin point of control. I did not see that earlier, but that's interesting. This is just the bad and the ugly going on right now in this market. So the moral of the story is just basically trying not to get sucked into these little rallies that we're seeing at the end of in the beginning of the day. It's very difficult because you go back to like the last 7, 8 years when we started to see the market turn up a little bit. Usually the market just poof, would go. And now what we're seeing is, a couple green bars, even like we saw this morning. Some things really started to act like they were going to rebound quite nicely, and then they just completely reverse out of nowhere. So it's almost the opposite, right? If you were playing this market to the short side, which I certainly wasn't the last 7 or 8 years, every time you bought puts, right, you would probably get stopped out of them. And it's the same thing right now. Every time you buy calls, you're getting stopped out of them. So it's pretty nasty in terms of that. And as I said in yesterday's video, you just have to let this play through. I keep hearing, and I talked about this yesterday too, but I like to talk about what bothers me. But which I keep hearing people try to give reasoning. Oh, it's because of this and it's because of that. Guys, I mean, I just think we have been in a bull market for so long. Going back, and if you look at a SPY chart, we've gone up a lot over the years, right? So it's just coming out. Money is coming out. I mean, after this big run up for years, and I'm not saying that we're going to come all the way back down here. I think eventually this will stop. Do I know? No. Does anybody really know? No. So I'm not going to call out support levels and say, oh, well, here's the next one. If we hold this one, you just have to kind of let this thing play through. I'm not really holding it. How I'm trading on the short side is basically intraday. Because if you go back to the sheet that I had up, there's really not, you're getting the opportunity. For me, I traded the Qs to the short side. But before I kind of go over this trade that I did today, I think that's just basically it. I mean, you have I think it was $46 billion of outflows last week. You got to just let this play out. I mean, normally that would be a contrarian buy signal, but I'm not sure how much more, considering this long bull market that we've been in, it's been pretty, I think people were pretty heavily positioned long. And same thing with hedge funds. People were chasing performance. So it's an unwind, and it's a painful unwind. The main thing, and I tweeted this out last night, was the main thing in this market to do is to survive it for now. You could play with, to the downside with puts here and there. I just am under the impression, and I could be wrong, that eventually we're going to get a pretty decent snapback rally, even if it's for a couple of days. So I'm not really holding a lot of puts because I think you could do that during the daytime. Again, considering this action, which we basically saw every day. I'm sorry if I didn't explain this, but this is the change from the open. So the Qs went down 1.3%. From the open. Remember a couple months ago, we hadn't seen a 1% move in months, right? Now we're seeing 1% moves intraday. I mean, look at like Amazon, for example, right? I've got the FANG stocks down here. If you wanted to short Amazon on the open today, that's 2.8% to the downside from where it opened. Again, that's not the change of the day. That's the change since the open. So as long as you're pretty disciplined, and if you think, I mean, I think Amazon goes probably back to the bottom of value for certain. Sorry, not for certain, but I'm just following what's going on here in price. I mean, this finished down 4% on the day, but from the open, right? So that's, it did the majority of the sell-off during the day. So if you're open-minded to playing both on the long and the short side, you don't even have to hold positions that much overnight to take advantage of the volatility. Right? And I say this because just to kind of make you aware of what you can do intraday. And again, you have to be pretty open to playing things on both sides. But really, that's where the money is to be made. I mean, I'll go over my Qs trade. So again, I'm not going to talk about the reasoning for the sell-off and so forth. But right now the momentum is to the downside. Certainly, if you traded at all this week, I mean, any day that there was a little bit of a bid, it got phased out. And the overall, the other thing is I would have said that, if somebody asked me, hey, how much did you think the market was down for the week? I probably would have said 3 or 4%, or even more. This S&P was only down 1% for the week. And that's because we started higher. In the beginning of the week, almost, I think it was Monday, Tuesday, and Wednesday, we started the day higher. So it's really the intraday action. Now IWM, which I didn't show the IWM chart, but that also looks hideous as well. So we were talking about my colleague MQ put out a chart earlier about this. Sometimes the biggest rallies can come in bear markets. So maybe we're due for one of those next week. I will tell you, I will give you a sense of what the option activity was. I think it was a little bit of a change. There was some pretty big index flow. Pretty short dated, right? This is December 31st. Look at the size of this trade, by the way. It's a $2 million trade. So what do we have next week? So it kind of makes you think. One of TTG members mentioned this, which kind of was a nice light bulb event for me to hear it. We've got a Fed meeting next week. So if by chance, who knows what they say for the Fed meeting, but it looks like somebody's positioning to the long side. Look at this order that went up. February 276 call. So this one's a little bit further out. Now again, we don't know what they're doing with that trade. Now this probably was an unwind, right? We don't know what somebody's total book is, and I put this out on Twitter earlier. So again, before I go to what I said on Twitter, but it is showing that somebody's kind of positioning bullishly a little bit in a few different orders today that we saw. Does this mean the market is guaranteed to go up next week? No. And somebody said this to me on Twitter when I posted this, because I like to put out information, and sometimes you just get trolled, with which I'm okay. I've got a thick skin, but it's pretty funny to I like to refute what people say. So somebody said, "Oh, well, somebody knows someone. Somebody knows something." That's not necessarily true. And the problem sometimes with option activity, and I talked about this in yesterday's video, it gives people a false sense of hope. Same thing it's the same story with people putting out setups, like technical setups. I think it gives people a false sense of, people think that somebody knows something. So I think you just have to trade your own system. If you've been following some of the order flow in options over the last few months, just strictly blindly following some option flow, you've gotten creamed. So you have to have another system than just saying, oh, there's a big order of spies on the tape. Really, because in all, this is a big order. It's a $10 million order. But you don't know how big somebody's portfolio is. You have no idea if this is a hedge for somebody's short book. We have no clue. Just because somebody buys that order. Does it make me think why somebody might be putting something on of that size? Sure. You've got quadruple witching next week, and you've got a Fed meeting. So maybe somebody is thinking that something bullish is going to happen to the upside. Maybe it gets me to kind of put some skin in the game to watch out for some type of reversal. But, I'm not going to change my whole portfolio because I see a big order in the Qs and a big order in the SPYs. I talked about that in the banks yesterday, right? All this order flow in the banks that, they say on CNBC halftime show. And I know I don't want to mention names, but, if you took that order yesterday, right, they mentioned all this bullish activity. Look at what the banks have done since those orders went up. You got beaten up. So I don't know why people continue to give these guys credit and want to hear more and more unusual option flow when, Citigroup down another 1.3%. All right. So I point this stuff out because nobody else does. Nobody ever, option activity. Well, let's hear more option activity. I don't get it. I don't get why someone doesn't come on and say, how much did you lose on these orders? I don't like every time these guys will come on. Oh, well, we're probably going to hold it for 2 to 3 weeks. Blah 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 blah. It gives people a false sense when they come on and talk about unusual option activity. I think it is really doing retail investors a major disservice by coming on and getting people all excited because there was calls bought in Citigroup. That's just my opinion. And I see the majority of other people who talk about option activity. You never mention anyone talk about, hey, all these orders that I just talked about the last 2 weeks, well, they didn't work. And maybe, I think part of it too is people have that one order where there's option activity and there's chatter in a name and somebody buys calls 15 minutes before and the calls go from like $1 to $2 in minutes, and everybody thinks that that's how every order is going to work. That is the outlier, folks. That is the absolute outlier. And I don't have the statistics behind it, but I would probably say that's 1 out of every 25 orders that you see sharp aggressive activity, and it turns out to be you buy calls for whatever 50 cents and it turns into $1.50 or $2. I would say 1 out of every 25 orders on the tape. All right, so got that out of my system. A couple other things, a couple other names to kind of watch for next week. I'll be going through the charts as I do every weekend. Twitter, is managing to kind of hold up here. It was flat on a week tape. That's relative strength. A couple other names that I was looking at today. Netflix, really good. So here's a good example. I like to point out these examples of where you can use your own technicals. Right? For me, this was a name that was on my watch list this morning, but look at what it did. It could not get out of, and many stocks are doing this, by the way. Right? It could not. We talked about this in the trading room today. I said, watch this on the top of value. It's doing, I'm like, for whatever reason, it cannot get going. Right? Look at all the checks. 1, 2, on the 5-minute bars. 1, 2, 3, 4, 5, 6, 7, 8. This was a close above value, and I said, at the beginning of the bar was like, hey, went up to 277. I said, watch this Netflix. It might want to go here. It's finally getting outside of value. And then it did not close right, and it had no oomph behind it. And then that was it. And then good night. Basically straight down from 12:55 on. Right, so using the valuers, it helps me a lot. I talk about them a lot because I want some nice verification or confirmation that that the trend is changing. A couple other things that we talked about in the trading room today. I thought this was also revealing. Just kind of helps you kind of take a step back. I know if you're a day-to-day trader, you're very focused on what's right in front of you, but this is I'm trying to remember the book. This is from How to Make Money in Bull and Bear Markets. That's not I don't think that's the right title. I apologize, but that's not the William O'Neill book. It's another book, but it's a very similar title. But anyway, this is the four-year presidential cycle going from 1886 to 1983. The first election year is a positive year, and the next 2 years there's a turnaround, I guess, and I guess this is actually the third year of a presidential cycle, but +2, I guess, from election year. So, that's the pattern. Do I rely a lot on patterns? It's the same thing what I was talking about with option activity. I think these seasonal factors give people false hope. Seasonal factors are probably one of the last things. I've never made any money. I don't want to say never, but I would say maybe 5 or 10% of the time I've made money on something seasonal. Guys who tweet out, well, this is the first time that this has happened such and such time. I've never made any money on anybody, and I know there's a couple guys who do a great job of this. They say, hey, this is the last time this was happened was 5 years ago, and then we rallied 5% after that. In 3 of the last 4 times, I've never been able to make money on any of those statements. And I don't know if somebody has, you can email me and tell me about it. But has anybody ever made any money by saying, oh, this has happened out of the last 4 out of the last 5 times in the last 30 years. This has happened, and then we rallied 3% after that. I've never been able to make any money on anything of that sort. Same thing with the seasonality. Everybody expecting, everybody was expecting a strong week after Thanks or the week of Thanksgiving. Everybody expecting the Santa Claus rally. It gives people false hope. So going back to so I know I'm going on for a while, but these are some of the things that are going on in the market. So I'll just kind of go back, just wrap this up because the video is now 20 minutes long, and I think for now. You just kind of have to let this work its way through. And if you're surviving in this market, you're doing a very good job. That's the right thing. Surviving, I think that is paramount right now to basically survive in advance. All right, so I will leave it there for now, and I'll be, of course, looking at the charts and looking to see if there's any bright spots in this market, and then we'll go. I'll see you guys back in the trading room on Monday. Thanks very much for listening, and I'll see you guys on Monday.